If you've got an old roof that you've been thinking about replacing,
Mic check. How y'all doing? Mic check. Hopefully y'all doing good tonight. Into another episode of the intraday price action recap. Oh, I ain't got my camera on. What's happening, everybody? Hopefully y'all doing all right, man. We pulling up for the intraday price action recap. You know, gonna make it do what it do. I don't I brought my little boom arm back in. I got it mounted in a different way in my new setup, but I got it where I could keep it close to me now. It's mounted from the bottom this time. I got it where I can keep it close to me, keep the mic close to me, and still be able to access the keyboard. Right? I can keep it out the shot and everything. Anyway, good evening, everybody. Like I said before, this is another episode of the intraday price hack shown recap. And as usual, this episode is being brought to you by none other than the forthcoming. Hold on, I just got a text, y'all. Being brought to you by Back to Basics, man. The video series where, I'm going back to the basics, going over everything that I've ever covered on this everything that I've ever covered on this YouTube channel, starting from the absolute beginning, like, hey, what's going on with this thing, man? I'm sorry, y'all. I got a text and now my phone doing something crazy. From like, hey, what is a stock? What is the stock market? What is a candle? What is an option? What is this? What is that? What is this? What is everything? The absolute basics, all the way through being an intraday day trader, right? The most advanced, the most basic, all the way up to the most advanced. And that's why I call it back to basics, because we got to go back to the beginning. Let's go back. Let's go all the way back. Right. I already started putting together the lectures. I've been putting together the lectures and all of that. It's going to be all pre-recorded videos. We're not doing anything live. It's going to be at your own pace thing that you go through. Gang. It's going to be available to you for absolute free. If you have been a part of the gang prior to March 28th, 2025. So March 27th back. And that's the Discord version of the gang, the one that you pay monthly through WAP. If you are a member of that prior to March 28th, 2025, it'll be available to you for free. Again, I'm not blocking my blessings. If you want to go out on the WAP and purchase it, hey, I ain't blocking my blessing. If you want to go purchase it for a family member, hey, I ain't blocking my blessing. It's going to be out there. You know what I'm saying? If you just want to pull up and just say, hey, yay, Tim, I appreciate all you do. I'm going to pull up and buy it anyway. Hey, I ain't blocking my blessing. But what I want this to be is an all-inclusive, one-stop shop for anybody that want to know anything about investing, trading, stock market, anything, all the way up to the person that wants to do it for a living, day trading. That's what this is going to be for. If you're just interested and you want to be able to manage your own retirement portfolio, if you're interested and you want to swing trade options, if you want to buy shares, if you want to day trade options, if you want to day trade futures, if you anything you want to do, it's going to be an all-inclusive video series. That's what back to basics is gonna be. Now let's get into this intraday price action recap. Get out the way. Back to basics. Get out the way. All right, this is today's price action. Starting over here, this purple rectangular shape on the screen, that right there is our new week opening gap. All right, new week opening gap. This right here is, we closed here at 4 o'clock, the New York session, and then we closed here at 5 o'clock. Right, so not far from where we opened. Okay, opened, we went down, we went up, then we came right back to where we opened. So here at 4, we was here. Then at 4:15, when we get our settlement price, we were very close to where we opened at. Right. Right here. So when we go there, they got the exact same price on there. Like that settlement price changed, but this settlement price not changing. Why they got the exact same settlement price here? That's weird. That's weird. because they got oh, you know what? Maybe because it's when we closed at when we closed. Yes, it is right here. When we closed at 4. There it is right there. Because we closed at 4 there. So we roughly get the settlement price here. For some reason, I was under the impression that we get the settlement price after the 415 close, right? But that's the New York close there, and we get the settlement price. It always be like right around here. I've never seen it where the settlement price was the exact closure of the candle, right? But I've always seen it move a little bit, especially when we closed here. All right, we closed there. Right there. And then this right here is the actual 459 close. Right there. That's what that is there. So this right here, that's like the non. This right here is the. Change that to black. All right, now go back to the daily candle. Where did them lines go? All right. So yeah, so okay, now it's moving now. I guess it was moving so little. It was moving so little I couldn't see it because it barely moved. Right? Because when I turn the settlement off, that's the closing price. And then when I turn settlement on, right there. So I guess it was moving so little. It was moving so little that I thought it wasn't moving. Cause I'm like, I've never seen the settlement be like that same price. Right. So it was moving so little. I thought it was so right here, this right here is the 4 o'clock close right there. Right. And then the settlement price came in right here. Right. That's the final settlement price that came in. And then that final settlement price, right, happens to be right there in line with the open of the 459 candle. And then that gives us the 459 candle closure. That gives us our daily close with the settlement turned off. Right. But yeah, I'm there. Yeah, for some reason I thought the settlement was like after 415, but it's right there after the close after right there, that closure at 4 o'clock. And it'd be roughly around there because it's the price that they settle up all of the, when you get your margin call, it's the price you got to settle at right there. All right. Now that I went down a rabbit hole on that right there, again, this is our day of trading, right? For those who don't know what a new week opening gap is, it's the difference between the closing price on Friday here and the opening price on Sunday evening, which is Monday's trading, right? So you got the open for Monday here, right? At the lovely price of 21,799 and a quarter. It's a bearish new week opening gap, meaning we gapped down, we gapped lower than we closed on Friday. And then we got the true day open right over here at midnight, right? And that's at 21,744 even. What's the difference between the daily open and the true day open? The daily open is the start of the futures trading day. The futures start at 6 p.m. in the evening, right? Sunday through Thursday. Right? Starts at 6 p.m. in the evening, Sunday through Thursday. It's closed on Saturday and Sunday, right? No trading on Saturday and Sunday. Then it opens at Sunday at 6 p.m. Right? So you don't have a 6 p.m. open on Friday. You don't have a 6 p.m. open on Saturday, right? Start on Sunday, 6 p.m. right now. True day open, that's midnight. That's the midnight open, Monday through Friday, right? Because this is when the algorithm starts the new day at 12 midnight. The algorithm starts the new day at 12 midnight. So Monday at 12 a.m. all the way through Friday at 12 a.m. That gives you your 5 trading days based off true day, right? Right. And then 6 p.m. is the start of the futures day. These are both important opening prices. Remember the 4 pillars of price actions: the open, the high, the low, and the close of everything, every candle, every day, every session, every week, anything with a open, with a high, a low, and close, right? You want to realize those points, right? On the day, this is the open, right? This is the high, this is the low, and then right over here, this is the close, right? On the day. All right. Let's mark those out, right? This is our open. Let's take everything off the screen. I'm taking everything off the screen. I'm just deleting stuff. I don't know what I'm deleting, but it ain't important right now. Right. I'm gonna leave the new week opening gap there. Right. So that's our no, I'm gonna hide the new week opening gap too. All right. So let's come here. That's our open right there. That's our high right there. That's our low right there. And this is our close right there. Right. And that's for the day. That's our open. That's our high. That's our low. That's our close. Right. For the day. Okay. If we look at each individual session, right? Each individual session has the same thing, right? We're going to go here. I think it closes at 2. I think it closes at 2. Let's double check it. I don't want to give out false information. Um, all right. So from 9 to 3, right, we got Tokyo Stock Exchange from 9 to 3. 9 to 3. All right. So 9 to 3. Time is Tokyo. So at 3 a.m. So 2 a.m. Yes, I was correct. So 2 a.m. is 3 p.m. So from 9 to 3. So that's the close. Okay. So for the Asian, right? This is like the pre-market. We consider this the Asian too, but the Asian actually opens at 8 o'clock. All right. It actually opens at 8. So 8 p.m. See 9 from 9 to 3. So it's actually from 7, from 8 to 2 is the actual hours, right? That's the actual hours. And then the Sydney starts somewhere around there. But it's the market starts moving at 6, right? So we just kind of treat that as the open. But if we go off the true time of the Asian, right? So we go to 8 p.m., right? That's the open. Matter of fact, take this, make it a dotted line. Right? That's the open. That's the open. And then it's here. And that's where's 2. And open and close right in the same spot. That's the open, that's the close, right? So if that's the close from 8 o'clock, means that's the high right there. Hey, Tim, why are you doing this? Because I want to. And then that's the low, right? So we got the low in the same spot as the other. Right. I put the wrong thing here. That should have been this line right here. Oh no, they close at 2. Okay, so they close at 2. So that means this is the close here. Right there. They close at 2. So that's the close right there. All right. I had it closing at 3 when the London actually opens. Right. So on the whole day, right? That's our open, our high, our low, and our close, right? For the Asian session, right? This is our open, our high, our low, and our close. The Asian session and the daily session has the exact same low, right? And if we move over here, right, this is 3 o'clock. We can transform, go forward through all the different sessions. But if we come all the way over here and we see that this is 10:30, then we notice that the New York session and the day have the same high, right? So we made the high of the day during the New York session, and the New York open, right? Here, 9:30. Right? That's the new. I guess I should name these since I'm already engulfed in this. Let's go ahead and keep on going. Right. Okay. A lot of people probably be looking like, Tim, we know this stuff. Everybody don't know this, man. Everybody don't know this. This is like this might be something super insightful for somebody. Somebody might be like, oh man, I never knew. I never knew. I never knew. Mm-hmm. New York open. That's on the bottom. All right. New York high was up there. Talked about that making the same high. You know, like Tim, you should have did all this before you even got on the stream with us, man. You wasting my time. Shut up. 9:30.
Hey Tim, with all
Yeah.
the opens and closing, it's starting to look like you ran the fib.
You know what I'm saying?
Yeah,
You feel me?
it might play out like that.
You feel me? Mm. This is the 9:30 candle. Okay, yeah. All right. So let me need to figure out a way to see if I could. Got so many ways I could change these lines. You're gonna give me but so many ways I could change these lines. To make them stand out from each other. All right, so we got the Asian low, daily low, New York low. So the Asian open, high, low, close, New York, and then the other one is the London. We got all those, and the other one is the London. Let's do the London like this right here. So we go to 3 a.m. 3 a.m. now. London open. London high, right? The London high, the same as the New York high up there. Because that's during the London time. That's before the London close. In London, open here. Then we got London. All right, London low. It's gonna be red. Then London close. Is it 11:30? Let me see. Come here. To 4:30. Oh, it didn't update. Okay. All right. So 4:30. So 11:30. All right. So 11:30. London close. 11:30. Right. Take this time off. All right. Now, we done did all of that. All right. We done did all of that. And then this right here, we can put back on this new week opening gap. So we'll see our open, our actual, this is showing us our actual, the difference between, that's how I knew they opening gap, right? The difference between the close on Friday to there. And then last thing I put in there is the midnight line for the true day open. Midnight open. All right. So, okay. Everything in price, right, has an open, high, low, and a close. All right. So when we look at our daily candle, turn this off. Then I go to the daily candle. Right. So we look at our daily candle, right? We see on our daily candle, right? We got an open. It's a green candle, so it opened at the bottom of the body, right? We got a high. This is the highest we traded during the day. We got a low. That's the lowest we traded during the day. And we got a close. That's what we closed at during the day, right? That's one daily candle. Then we drop back down, right? Matter of fact, let's just drop. I'm gonna just drop all the way down to 1 minute candles. Hopefully I can get it all in the screen, right? If I drop back down to 1 minute candles, right? And I turn on our lines, right? Remember what we said, right? This was our open on the day right here. This was our high on the day. This was our low on the day. And this right here was our close on the day, right? That's what we closed at right over here on the day. Okay. So we, and y'all know that drive me crazy when my stuff don't be on the 1 minute candle. So I'm just going to stick with the 15 minutes so that the lines will be right on the edge on the candles, right? So throughout this whole day, right? This is our open, high, low, close. We open here. Now we start a session, right? Right here, we usually treat the 6 o'clock as the Asian, but the true start of the Asian is 8 p.m. So we look over here at our Asian open. We open right here on the Asian. So we opened up, right? And you see here, where did we close at on Asian? Asian close right there, right? So when we open up on the Asian, we came up here, we made a high, okay? Then we dropped down, we made a low. And then we came over here and we closed here on the Asian right there, right? So we got an open, high, low, and a close during the Asian session, right? So the Asian session created in hindsight after the day closed over here, we can look back in hindsight and say that the Asian session on the low of the day was made during the low of the day on June 9th, 2025 was made during the Asian session on the 10:30, 15-minute candle, right? And you can go as low a time frame as you want to find the exact time, right? Because if you want to get the exact time of it, the exact minute of it, you come in and say it was made on the 1031 candle, right? It was made on the 1031 candle. Y'all know I'm finna come in here and fix these, right? Y'all know I can't help it. Yeah, I can't help it. I can't help myself. Wait a minute. What is this here? Okay. Had that marked on the wrong candle, but it's marked correctly now. So I had it on the 8 o'clock. Yes, I did. 8 o'clock. Okay. All right, who else not lined up? Who else not lined up? New York, 9:30. London closed, 11:30. It's 11:29. Can't let me right there. Wonder why that off a little bit on that 1 minute candle. Down there is right. All right. So, hold up, miss one. All right. So now, and we got that, right? And that's how you collect data like this, right? You say, okay, you collect your historical data based off when lows of days and highs of days were made, what time-based liquidity was ran, you know what I'm saying? And it's how you collect your data, looking through price, and you keep track of this, put it into spreadsheets, put it into databases, anything that help you search through the data quickly, or you can just do an old school, write it down, save it on notes and go and like screenshots and go back and get it, right? So once we going into the Asian close over here, My midnight is overlapping that and put that in the middle. All right. So once we get to our Asian close here after midnight, midnight starts the true day, right? So we got a daily open here for the futures day, right? And then we got the true day open when the algorithm starts to run, right? Starts to run for the new day, right? So we got the true day open here. Once we start the true day, right? We then end the London session over here at 2 a.m. Right. So at 2 o'clock in the morning, we end that Asian session. I'm sorry. Right. 2:30. I'm sorry, I said 2 but 2:30 here. So that's not right because I got it on the 2:39 candle there. That's supposed to be on the 2:29 candle. Right. Because we close at 2:30. I need to get here on the 2:29 candle there. That's where it closed at there. Boom. All right. So we close the Asian session off here, right? So boom, God dog it. So boom, that's our Asian open, Asian high, Asian low, and then Asian close. Okay. Then we see we made the Asian high, right, at 8:09 p.m. Right. We already know what time the open was because the open not gonna change. We made the low at 10:31 p.m. Right, made the Asian low at 10:31 p.m., which is also the daily low, right? And then we opened up at midnight and then we closed, right? Then once we closed over here at 3 a.m., okay, we started the London, right? Now, all of this is the Asian closes inside the London kill zone, but we start the London session here, right? Just going off open, high, low, close throughout the day, right? So we start out the London session here and we open up at 21,766 and a half. Okay. And that's just above where we opened up the Asian. Okay. So we opened up the London fairly close to where we opened up the Asian at 21,763 and a half. And we opened up the London at 21,766 and a half, 3 points higher than where we opened the Asian. Okay. We drop down, we move up a little bit where we drop down below the Asian open. All right. And we set I'm missing something. That's supposed to say London low. Wait a minute. I'm missing the London low. That's the New York low. There. That right there should say London low. It does say London low. Where is it? Oh, you know what? It's not on a ray. It's not on the ray, so that's why it was not in the screen. All right. We got it. Okay, let's do this right here. Since that's not on the ray, we're going to put it in the middle. All right. All right. So back on track now. So we open up the London, right? We trade down below the Asian open, right? Trade down below the Asian open. And then we set the London low, right? In hindsight, we see that this ends up being the London low, right? And then we trade up above the Asian high, trade just above the daily open, right? So we come in, we drop below the Asian open, right? Don't take out the Asian low, don't go below the Asian close. Then we rally up above the Asian high, taking out the Asian high and poking above the daily open. Then we trade back down below the London open, right? Kind of consolidate around the Asian open a little bit. Then we rally back up, creating relative equal highs right at the daily open. All right. And then we drop back now, mind you, let's look at the times we're doing this. Okay, so we set the London low at 3:20 a.m. right? On the 3:20 candle, we set the London low, right? And then we rally up, and during the 350 to 410 macro, right? We end up trading above the Asian high and trading up to the daily open. And we drop back down halfway through the 4:30 hour, drop back down the London open, drop down below the London open. Okay, preserving the London low, and of course preserving these other lows. Then we rally back up, right? Going just before the 450 to 510 macro, we start to rally, and then during the 450 to 510 macro, we trade all the way back up to the open, creating relative equal highs, right? During the 450 to 510 macro. Let's stretch this out a little bit for people who like to see the candles. We don't really need to see them, but for people who like to see the candles, right? Creating relative equal highs here, right? So we traded up there during this macro time, made a high. Then during this macro time, we created equal highs, right? Created equal highs. Trade back down into the range, right? Just below the Asian high, right? And we consolidate around the Asian high all the way up until just before the 650 to 710 macro, and we start to drop during the 610 to 750 macro, 650 to 710 macro. We drop back down to the London and Asian open, right? Drop down to the London open, wick down, touch the Asian open, and then we rally throughout the remainder of the 650 to 710 macro, coming back up, taking out the short-term buy side. All right, so we've engineered buy side liquidity, right? We've traded back down into the range to the Asian and London open, came from the daily open down to the Asian and London open, rallied up, took out the buy side, traded back into a deep discount, right? Looking like it gave a nice little OTE entry too, right? Traded back down into the discount, then rallied, taking out the relative equal highs that was set at the daily open, right? Daily / weekly open. Okay. Took out those highs, and that was around 721, right? Around 721, we rallied into the air. Then we consolidated. Well, we made a new high there that still wasn't the London high or a daily high yet. Made a new high, came back and started to consolidate around Friday's close and today's open, right? Remember, the high of this is Friday's close. The low of this purple area is today's open, right? And we're just consolidating there in between Friday's close and today's open up until the 9:30 open, right? At the 9:30 open, we stop consolidating in there and we drop down, trading down below the Asian open, right? But did and made relative equal lows with the London low, right? Made relative equal lows with the London low, then turned around and that was on the 939 candle. Then we turned around and going just before the 950 to 1010 macro, we rallied, right? We traded back up to the daily open, and then we rallied above the short-term buy side here that we had been when we were accumulating in between Friday's close and today's open, right? Took out that short-term buy side there, creating relative equal highs with this 758 high over here. And if you look further back, also this 737 high over there, right? So we created relative equal highs after taking out the short-term buy side, short-term / internal, because this high here created a new liquidity pool, right? So coming from this low to that high right there, okay, that right there, come here, find 6 o'clock there, that's 6 o'clock, right? Coming into 9:30, the New York Open here. This is the New York Open. This is the lowest low, and this is the highest high of after 6 p.m. Notice that the lowest, God dog it. What in the world did I just do? Okay. Notice that the lowest low that we made after 6 o'clock. Notice that the lowest low that we made after 6 o'clock was right in line with the Asian Open, right? The lowest low that we made at 6 o'clock was 21,763 and a quarter. And the Asian Open was 21,763 and a half. So one tick below the Asian Open, right? So we dropped below the Asian Open, creating the lowest low after 6 a.m., right? Then the highest high that we created after 6 a.m., right? So now that gives us our new dealing range, right? How Michael teaches it in the 2024 mentorship with Caleb. We're looking at lows and highs that's created after 6 going forward, and you're looking at how price engage with these lows and highs to form a trading range, with even if you don't have a daily bias. So at 9:30, right? At 9:30, we drop down, taking out that low, right? So we take out the low. Remember, that low set a new liquidity pool after 6. That high set a new liquidity pool after 6. Okay. Coming into 9:30, we drop down, take out that low of that right there, right? Come down, set relative equal lows from the London low, okay? And then we rally up, right? Giving a bullish signature to want to engage the opposite end of this price range right there, right? So we come back up, trade back into the range. You got an opportunity here, and it gave you another opportunity there to trade back into this range. Very tough price action this morning, a lot of consolidating, right? But looking at it overall, the concept itself did play out, right? So we took out that low there, which was in line with the Asian Open, set relative equal lows, which was in line with the London low, set the New York low. In hindsight, we see that that's the New York low of the day, right? We rally back up, hang out, consolidate a little bit in between the New York Open and the Asian high, also the daily open, right? We're bouncing in between those areas, edges, engineering liquidity. We finally displace up, closing above the New York Open in the daily open at consequent encroachment of the new week opening gap, right? We finally take out short-term buy side. Like I said, took out the short-term buy side, showing that, a possibility you want to go up, but come back, handle some business first, come back down, fall just shy of hitting the Asian Open. Then we come back up using the New York Open and the daily open and the new week opening gap as support, and we rally, taking out the opposing side of the lowest low and highest high after 6 a.m. once we went into the New York session. All right. Once we rallied up, set a new high here at 10:30, right? once we set that new high at 1030, let's get some more meat on the bone there. There you go. All right, set a new high over here at 1032 actually. All right, so at 1032 we set a new high, then we pull back down into the range, right? We got a bearish breaking market structure pulling back down into the range, and then we created the London low right there at that high that was created after 7:30. So we closed the London right there at that highest high that was created after 6, right? The new liquidity pool we talked about, closed the London close was right there at that old high, right? Remember, open, high, lows, and closes, right? Then once we had the London close there, we sat there engineering a little liquidity for a while. Then we displaced away, creating relative equal highs at what we now know to be the New York high, the London high, and the daily high, right? All three converged in the same spot, right? Another place where you can make some more information. The daily high was London and New York created the daily high at 10:32 a.m. on June the 9th, right? More data to collect. You know, we'd be looking at maybe like 70% of the time it make the high on this day, on that day, it make the high during this session, it make the low during this session. That's how you collect data like that. Like I said, and then you put it into a program that can easily recall it, like a database program or a spreadsheet or whatever you choose to use, some kind of back testing software that can pull it up for you. Those be database programs and all that right there. All right. And then kind of hung out there, set them relative equal highs. Then we broke down again, not showing the willingness to go lower or higher, right? We moved into another area of consolidation / accumulating, which is accumulating buy stops and sell stops, right? Accumulating sell stops below the 1127 low, accumulating buy stops above the 1032 high, right? So buy side, sell side is just accumulating all during this time right here. And then finally at the end of the day, right, at 358, 359, then we drop down, taking out the sell side, right? And then closing the day, the New York close here at, well, y'all see that, right? New York close over there at 21,818.75. And then we continue to drop down back into the daily open and the New York open. And then we start to rally back up, got above the New York close and closed on the day at 21,822.25, 2 points lower than we closed the the London session, right? So as you look, like Lump put up and said, when I was drawing out all of the open highs, lows, and closes, right? He said it's starting to look like a fib tool, right? It's starting to look like a fib tool because the Fibonacci tools is they're mathematically generated for certain percentages and levels based off the opening price and the closing price. And so based off of open high, lows, and closes, the algorithm is going to set new opens, set new highs, set new closes based off prior opens, based off prior highs, prior lows, prior closes, right? And so when you start to draw them out, then it will look like you're grading a price range, right? Because if we come here, go from the low of the day, if I can get on there. Oh my God, can't. Let me spread this out so I can get on the candle. Okay, so come here, low of the day, high of the day. Let me thicken this up. so we can see it. Right. So go from the low of the day to the high of the day, right? Our weekly open, and just around consequent encroachment of the new week opening gap is smack dab in the middle of the entire range of the day, from the lowest low to the highest high of the day, right? So equilibrium on the day is resting right around where we opened it, right? And y'all already know what I talk about. Be like, when price is unwilling to leave a opening price, that tends to lend to difficult trading conditions, because when it's unwilling to leave that opening price, that tells us that we're kind of consolidating. And if we look at what price did, we came down, we set this low, and then look here at like around 25% of the day, right, of the dealing range, right? Look how the price used that as support, right around 25% of what eventually became the high. Because at this point in time right here, this high is not made yet, right? So let's run it back to here. Let's run it back here before that high was even created, right? So before that high was even created up there, we don't even know that high is going to be high right there, right? And this is how I kind of came up with the Timbanucci tool, right? Based off of where prices doing the most consolidating it, right? And we'll talk about the Timbanucci in a second. But look here at the area where in hindsight, we realized that that's the lower quadrant of the dealing range, right? Look how price is using that as support, right? So right here, okay, going into the London session just after the Asian close, right? We use it as support. Right over here, around the 4:30 time frame, halfway through between 4 and 5, we use it as support. Over here, we get close to it during this macro time. We get very close to it, but we don't violate that low, right? Over here, after 9:30, we drop down, right? We don't violate the London low, but we come back down and we use that 25%, that lower quadrant. What we know, once this is set over here at 10:32 in the morning, we come back. But before 10:32, the algorithm already knows this is an important level that I'm going to use, right? Based off of what's going on back over here in price, I know that this right here is an important level that I'm going to use for support, because that right there is going to be the high that I get to. All right. So even before we get there, you can see how it's using that quadrant level as support. Now, let's talk about them Timbanucci's. Long time ago, when I was studying price, right, it dawned on me that whenever I measure a dealing range, right, price always tends to consolidate at equilibrium, right? I'm like, wait a minute now. So if every time I run a dealing range, I see that price is consolidating at equilibrium, that means when I'm watching price and there's nothing over here on that hard right edge, if price starts to consolidate a lot in an area, then I could just take a fib tool and I can run it from the lowest low or high, which, like, if it's going up, click on the low. If it's coming down, click on the high, and then just take the fib tool and stretch it up until the 50% is resting right, right there midway, if or so, in between the area that's consolidating, just like this here, right? And then I can say, oh, price can reasonably come here, and that can give me a guesstimation of where price is drawing to. And then I can start to look for entries, reasons to buy in a discount if I'm bullish, or to sell in a premium, right, if I'm bearish. All right. And that's how I came up with the Timbanucci's. All right. Now, right. And then as we see here, with the benefit of hindsight, we see that price consolidated here at equilibrium of the range. This wasn't set yet, but it consolidated at equilibrium of the range. What did we say that was? We said we was bouncing in between Friday's close and today's open, right? We was sitting there ranging in between Friday's close and today's open, right? So the difference between Friday's close and today's open will give you consequent encroachment of the new week opening gap. And we were sitting there consolidating right there at consequent encroachment, right there at equilibrium of what became the dealing range on the day, right? And then once we engineer enough liquidity, then we drop down into a discount, taking out sell side liquidity, creating relative equal lows, and using the lower quadrant, right, which is resting right there near the Asian Open and the London Open, right, without taking out the London low, but we use that very important lower quadrant as support, right? Then what do? We rally from the lower quadrant to the upper quadrant, pause for a second, and then we rally up to the what's in hindsight known to be the high of the dealing range, right? High of the day. Looking back in hindsight, that was the high. Then what do? We come back down to that upper quadrant. Well, we trade back to the upper quadrant, then hit it. Then we trade back down to the upper quadrant, trade up, drop below it, come up, take out short-term buy side, drop back down below the upper quadrant into the London, closing for the London, into that prior high, right? From 7:30 in the morning, right? Come down, get the London close, hang out between the upper quadrant and the London close, right? Trade up, create relative equal highs, trade back down using the upper quadrant as support, right? Never taking out that high again, right? Just engineering more liquidity, rallying there, drop down to the London close, rally back there to that upper quadrant, drop down to equilibrium, right? Rally back up to that upper quadrant, right? What is in after hours. So in the after hours, we went back up to the upper quadrant, then came back down like that. But as you can see, right, the algorithm throughout the whole day, right? And the only PD array that I talked about was the new week opening gap, right? That's the only PD array I talked about. But that new week opening gap, the only reason I was talking about that is because that gave us Friday's close and today's open, right? So we can quickly see Friday's close and today's open. But the rest of it is just based off of the open, high, low, and close for all the different segments. I mean, all the different sessions throughout the day, and how we end up with the open, high, low, and close on the entire day. That's all I got, man.
That was all good, man. We needed all that stuff on the screen. You talking about what we doing that? Hey, this stuff really works, man. Cause like you say, in hindsight, man, if you take that film tool from that low and stretch it up, it hit that 50% where it was consolidating and your new week opening gap before the high was made. Like like you say, if you just stretch it and put that consolidation at 50%, that's pretty much where the high is gonna be at.
Yep.
Yeah, man, this stuff works, man. I've been coming to school.
Yeah, okay. Welcome.
But I've been here before. You still got to give me
Uh-oh. Did I lose you?
no, you got to give me a hearty welcome.
Oh.
No, well, thank you. Yeah, you got to
Well,
give me a
thank you.
Yeah,
Always
thank you.
tuning in.
Yeah, that's it.
Hey man, that's all I got. I know we was on here for a while. It took a while to set up, but I wanted to go through price, and you know what I'm saying, in a very basic way. I'm talking about back to basics. So I wanted to go through price in a very basic way, right? Because if you don't understand what's the things we need to understand, what's the most important part of price action that we need to understand? What's the two things?
Time and price?
Nuh-uh.
Nah.
Time and price. That's but I'm saying what about time and price do we need to understand? One starts with a O and one starts with a P.
Somebody help me out. I know Shaughnessy to know. Oh, Jim right there. Jim know.
Order flow and
Order
price.
flow.
Yes, order
Okay, and
flow and
price
price
delivery.
delivery, right?
Okay,
So
see, I know Jim on it.
order flow and price delivery, right? So, and what is order flow and price delivery? What it's going to be connected to? It's going to be connected to specific times of the day. It's going to do specific things at specific times of the day, right? That's why I say when you're going through looking at your how price interacts with these different open highs, lows, and closes, right? You want to see what time of day is it doing it and what is it reacting to, right? So, like we said here during the New York Open, during this drop down here during the New York Open, okay, let's go and investigate what we're doing here. Okay, so based off of order flow, right? Price from once we opened here and dropped down and made a low, then we came up and got, look right here, right? We got a bullish break in market structure there. Where did that break in market structure occur? It occurred at what we later in hindsight know to be that also important lower quadrant of the dealing range. Okay. Why? Because the algorithm knows that this is going to be the lower quadrant. The algorithm knows from here to there, that's the range I'm going to be dealing in. It knows this, and we don't know. We have to look for the signatures to figure out how to figure that out, right? So when we look here, we get a break in market structure right there at that oh so beautiful lower quadrant, right? And then we trade back in and we set a low where right here at that lower quadrant. So we have what high probability PD arrays resting right here around that lower quadrant, right? And when we look around that lower quadrant there, if we come here like this, right? And if we come here like that, y'all. I like that. I like that, y'all. Time there. Picture here. Right. See if I can copy this right. See if I can copy this right. Oh, man, why did I jump to 8:30? Oh, this is
Tim, I thought the macros was
yeah, it is. This is like something jumped. It jumped like way off. I had it.
10 before and 10 after, right?
Yeah, it jumped when I was moving it. It jumped like over to like 8:30 for some reason. I thought it showed me the right time, but then it jumped. Let's see if I can get it right. It jumped for some reason. See that right there? Say 9:10. God dog. I don't know why it jumped like that. But they the same. They still the same size, but I don't know why they jumped around like that when I was trying to copy them. And it's not giving me it's not keeping the same distance between them. Okay. Look like it did that time. All right. So it looked like it did at that time. Yeah. Nope. This one ain't do it. So I spent so much time doing that. I can't remember what I was about to do now. But okay, the lower quad, we was at that lower quadrant there, right? So, right, at the macro time, right, we traded back up into that lower quadrant, what we know to be the lower quadrant in hindsight, right? So at a certain time, right, we traded up into the lower quadrant, and then we set a high, right? And then we have short-term sell side liquidity made during a certain time, right? At a certain price level, right? We trade down, sweeping sell side liquidity, right? Time-based liquidity during this macro, right? We sweep out that liquidity, then we trade up, right? And then we create another high during another macro at a time-based level, the open of the day, the low of the new week opening gap, right? So a time base, a significant time and price level, right, during a specific time, right? So, and then based off order flow, price is in a buy program. We get a break in market structure at a algorithmic level, right? We trade down, respecting bullish order flow by engaging buy side, right? Coming down, tripping in, shorters who want to go short, then taking them out the game and giving an opportunity to get long back up to a spot, right? Price delivery, basic price delivery. Let stops accumulate, engage the stops in the direction you want to go, manipulate the opposing liquidity, take them out, and then deliver, right, above a prior high, right? Deliver above that prior high over there, right? Or distribute, right? Distribute above a prior high. Going to distribute it, get a deeper pullback. What do we pull back to? That also beautiful lower quadrant, right? That lower quadrant lines up with what, right? This time-based area. This is where we got that break in market structure. This is where we set, right? Bullish order blocks, all that. We got a bullish order block here. We got a bullish order block here. We set all this stuff at a specific time, right? At a specific time-based level. We come back down to that time base PD array, right? Setting relative equal lows, respecting that low right there at there, come up, set equal highs, right? Still respecting bullish order flow as we accumulate, right? We accumulate this macro we don't do much on this time frame that we're watching, but we do drop down and take out sell side liquidity, right, during this macro time, but we're still accumulating, right? And what is this time here, right? This right here, if we look here from 5 o'clock over to 7:30, right? 5 o'clock to 7:30.
Open the cameras up just a little bit, Tim. Make it a little bit fatter.
This right here, I'm opening up just a second. All right. This right here is that I like to call it a dead zone, right? I like to call it the dead zone because this is in between the kill zones, right? The London kill zone, right, ends at 5, and the New York kill zone starts at 7:30, right? I like to use 8:30 because the news embargoes, but this is that dead zone right there. So we're in here just consolidating, right? We're in here consolidating and accumulating positions, right? So as we came down here to that level, came up and created relative equal highs, right? So we've engineered relative equal highs here, right? So engineered relative equal highs there, and get them a little drawn together. All right. And then we go into the dead zone, right? But even in the dead zone, you see here during this macro time there, right? We drop down and we take out sell side liquidity. Not only do we take out that sell side, we take out sell side from this prior macro right there. Still engineering liquidity there, right? Then we come into this macro. What do? We drop down, taking out sell side liquidity from that macro right there, right? And then we come down into this bullish order block, right? Where's this bullish order block residing? At that lower quadrant, right? Right here, this is that high probability zone right there. Trade down into that bullish order block. Okay, that bullish order block, we trade down to it. What else resides right there? That London open, right? So that's a time-based open, right? This is a time-based PD array at a specific algorithmic level, the lower quadrant of what we know to be the lower quadrant in hindsight, but the algorithm knows what that is during that time when it's making it, right? So we're trading down, and then we also trade down into a inversion fair value gap from a macro time frame, right? So if we look at this inversion fair value gap right there on the macro time frame right there, right? And we scroll back over here, right there, come right down to the low of that inversion fair value gap from this macro time frame right here, right at the end of this macro, right there, right? Create that right at the end of that macro right there. Trade back down to a time-based liquidity. Time-based PD array, right? Right there at a time-based level and a time-based level, right? What is that? The Asian Open and the London Open, was it? Yes. Right there, the Asian Open and the London Open. Okay. Time and price. All right. Must come there, right? And what does it do when it drops there? Right? It engineers more sell side liquidity from that low to that low to that low, right? Yes, we got a deeper retracement here, but this is all during that lull time, right? It's all during that low. So while we're going into that low, right, we're still doing algorithmic things, but it's in that dead zone where the algorithm is just engineering liquidity, right? AKA time distortion. So now, what does that look like? If we come in here and we mark all of this out, matter of fact, let's do this right here. We're going to go to that dead zone, right? And we're going to turn this white. raise this to 100%, right? And we're going to take that out. And then we take that out and look at the price, right? We see that price came down, right? Went up, set relative equal highs here, retrace back a little bit there, took out those relative equal highs, right? And then we come over here into the 930, right? After we come back down there, right? Come down there. And then once we come over here and get into 930 here on the open, we drop down to that 25% high probability area, come over and sweep these lows and set relative equal lows with the London low, right? Don't take out the London low, set relative equal lows, but don't take it out, still respecting bullish order flow, right? Because we're expanding the buy side, but we're not taking out the major sell side, right? We're not taking out the major sell side. What do I mean by that, right? We came here, set a low, we engineered liquidity, right? Then we blast off and we came here and created a new liquidity pool here, trading below these macro lows here. So we created a new liquidity pool here, right? Created a new liquidity pool there, right? Traded outside of this, like expanding the liquidity pool to the top, but we come back and did not take out this one, respecting the bullish order flow. Came very close to it, set relative equal lows, but then we reversed and continued the bullish order flow. And it's all wrapped around very specific time-based levels. When you understand where time is trying to go, where you understand what are the time-based levels, what is the time-based liquidity, what are the time-based PD arrays, then you can start to formulate, do I want to trade with the grain? Do I want to trade against the grain? Because you start to see, okay, the algorithm is using these PD arrays at specific times, right? Because like over here, we created something. We created this area over here, okay, during this macro time. All right, we took out a macro low. Okay, we respected all of that even during the dead zone, right? Let me move all this scribble scrabble. Right, even during the dead zone, right? We're respecting this level, right? And then once we did what we're gonna do during the London, right? When we come into the New York session, right? What do? Right? We get a Judas swing. We come down, right? But we don't come down to just a nowhere point. We come down to a time-based important level, right? What's important about this level? This, as we know in hindsight, becomes the lower quadrant. When was this level solidified or established? During a specific time. The algorithm did it during these macro times, set it during this macro time, respected it here, respected it there, respected it there, respected it there, right? But then we came into a new session, right? Because this right here was created here during the opening of the London. And then we come into a new session after the London and did all of this, right? We come back into a new session and then we get a manipulation back to a time-based level of support. And we get the manipulation down. When we go into a new anything, we anticipate what? Some form of manipulation. Don't have to happen 100% of time, but if you get the manipulation, that's giving you a better opportunity to participate on the run, right? Why? Because you're getting long in the manipulation leg to go and get distributed. You get an opportunity to participate with a better entry, right? So we get the manipulation to a specific time-based area of interest, right? Choose your PD array, right? At a specific level, right? Algorithmic level. And then we trade back up and end up making the high of the day. So it's all based off of order flow and price delivery And if you understand where price is trying to go, you understand what price is trying to do, then you can wait until time and price aligns, and you can, make your sound decisions. And you just want to try not to get caught up trying to force things to happen during the dead zones, right? Remember our what's the word I'm looking for? This, right? Time is king, right? What session are you trading? If you're trading these sessions, whatever session you're trading, the kill zone is the time when the algorithm, when the concepts are most probable, right? These are the macros is time when the algorithm is coded to do a specific thing, like engage, imbalance, or liquidity, right? You have opening ranges, right? If you want to trade the opening range, you want to formulate a strategy around the opening range, right? Just like we was talking about engaging the pre-market highs when you go into the opening range of pre-market lows, whatever. But if you're trading the New York, right? If you trade in the New York session, right? You want to be looking for your setups to play out during this time. What are you looking for during this time? You're looking for the market to engage with liquidity, right? And show you what tip its hand, right? What do we look for, right? If we're consolidating, right, and we're bullish, right? We want to see some type of manipulation here and then come here, right? Looking for opportunity to participate. Or if you're very much in tune, look for a lower time frame opportunity to participate here, right? Because you're looking for that manipulation of the opposing liquidity, right? The pretty much the safest, I ain't gonna say safest way, but the way Michael teaches it is manipulate the opposing liquidity, engage the liquidity, and then look for your setup here, somewhere over there after you manipulate and engage, right? But the way we trade it in the gang, right? If we're bullish and we see the manipulation, now we're looking for opportunity to get involved here, right? Because we want to get involved, right, at or near that opening price, right? Because it's going to be consolidating at or near an opening price of something, right? That 50% where we're consolidating, a lot of times it's going to land at or near a open something. Not all the time, but a lot of times it will, right? So you're looking for it to play out during this time, right? If you're trading in London, right, you're looking for it to play out during this time. See, that says 1:35. Don't be in there at 5:30, 6 o'clock looking for London setups, right? If you're in there at 5:30, 6 o'clock, you're prepping to get ready for the New York session setup, because your New York pre-market, right, you're looking for the highest high and the lowest low starting at 6. Let 6 o'clock go, let it set a high, let it set a low. And as you're trading in, right, once you get into 7:30, now you're seeing, hey, do we set a new low? Do we set a new high? Do we create relative equal lows? Do we set relative equal highs? But you're watching that low and the lowest low and the highest high starting from 6 o'clock in the morning, right? But you're not coming in there at 4:30, 5:30. If you ain't, 5:30, 5:45 looking for London setups, right? Why? Because your highest probability time window has gone, right? If you trade in New York PM, right, this is your time window when you're looking for the highest probability setup to form, right? If you trade in New York PM, if it looking to see if it offer anything. So remember, whatever session you're trading, look for the setup inside the kill zones, right? Look for certain reactions during macros, right? And then you can establish something based off of opening ranges, even if you don't have a bias. But time is king. Remember, time is king. Appreciate y'all, man. That's all I got. 7:36. If ain't nobody got enough for me, we're gonna call it there. because I'm starting to sweat. If y'all found this helpful, press the like button, share it with a friend. If you like stuff like this right here, you might want to, check out Back to Basics video series when I drop it. It's gonna be, starting back to the basics and going through everything from the most elementary to the most advanced. If you found this helpful, I already said that. Share it with somebody else, man. Trying to each one teach one, trying to reach as many people as possible and let them get some of this good game, man. Tomorrow is Tuesday, so no tape reading session. If life don't start lifing, I'll see y'all back here tomorrow night at 6 p.m. for the price action recap. Hopefully y'all enjoyed this different way of looking at price tonight, besides just looking at, hey, price went up, price went down, trying to, revisit the oldie but goodie, the old open, high, low, close. Y'all know that's where we be starting at. The 4 pillars, open, high, low, close. All right, man. Y'all enjoy the rest of y'all night, and I'll see you tomorrow. Till the next time I decide to get on Algo's internet and share my thoughts on this thing they call price action. It's your boy, Timothy Lee Rogers Sr., aka Aranya Grande. Ain't nothing but big spot if you don't hablo español. Y'all be safe out here in these trade streets, man. Gone.